Namaskar and good evening traders. Sunday evening, 11th of December. Tomorrow the market's going to open and we'll quickly take a look at what happened last week and what can we expect this coming week. Now, as always, I have a triple screen with me here, weekly, daily and the 75-minute time frame, using 75 as a short-term, intermediate and the weekly for the long-term view. Well, daily gave us an outside bar, a big outside bar for sure. My range indicators shooting outside the 2 standard deviation, which means that this is an exceptional move. We can see the extent of this move on the 75-minute time frame. Short-term trend has gone down. Momentum is on the downside. Any kind of a short-term bounce back from here on going forward should ideally face some bit of stiffness resistance at 18,650. Now, typical classical price behavior technical analysis is erstwhile supports when retested in the future should offer resistance. If it offers resistance, means if price comes down, then this overall downtrend is very, very strong. Expect further fall. Now, if that does not happen, and if erstwhile support once getting tested actually does not push the market down, on the other hand it goes up, then this downtrend is probably over with, and this support now will try and kick in for further upside. So any kind of a bounce back tomorrow, day after tomorrow, whenever, I think this is the band, 650, 750 kind of a band. I will not be surprised if you take a look at the options data for the Nifty. Majority of the call writing might be within this range. I don't track the option build up so closely, but I will not be surprised if it is right there. 18,800 and 700 probably will be the maximum writings. Price says it all. What about downside? We were talking about this gap up, if you remember last week when I kind of restarted sharing my market views. Now the good thing over here, if you recall, that this gap up also aligns itself with the previous high. Previous high should act as current lows, which is resistance becoming supports. If this happens, then within the next couple of days, we should see the price staying up, or in other words, we should not see a follow-through move. If we see a follow-through move, then this big uptrend is now under some threat, vulnerable for maybe a complex multi-legged correction, which means in that case, are we looking at the weekly correction towards 18K? Maybe. So first level is this, where we are right now. If we talk about levels per se, it's around 18,450. So 400, 450 is the first level. Below that, we can look at erstwhile lows, something like this, which is a little below 18,200. But quick look at the weekly charts. After a pretty good move, what we are going through is a much needed healthy correction so that the momentum indicators cool off and create some headrooms. So thoda jaane dete hai price ko on the downside. So even if it goes another 150, 200 points short term, creates a bounce back and falls another 200, 250 points, I think that's all part of how price behaves, the ebb and flow of price. Bigger picture is still intact. And jab tak I think 18K holds its psychological number, I don't think one should question the structural uptrend. The structure is beautiful. The momentum was there. Just early signs of momentum slowing down. So overall bias is bullish from a long-term point of view. The bias from an intermediate point of view is a little tricky because now it's vulnerable for further downsides. Short-term traders should keep a bias on the downside and should look to sell on the rise. Upside levels and downside levels for the Nifty we have discussed. Now we'll quickly take a look at the Bank Nifty. It seems like Bank Nifty has taken the responsibility to be the flag bearer and just keep on marching, right? 10 successive positive weekly closes. The moment I saw 8 and 9 successive positive weekly closes, I started to say and also feel uncomfortable getting into banking names on the long side, but PSU banks kept on rocking. I also last week shared a small view on State Bank of India, how I think that the stock probably is slowing down. The stock doesn't want to slow down, it seems. So nevertheless, 10 positive weekly closes for the bank Nifty back to back. Up to niche aaja means now it should come off, right? Now, I generally have noticed when there is such sheer bullishness or bearishness, it would want the final bear to turn bullish, or in other words, when someone kept on shorting the bank Nifty realizes, nahi, it's going to go further up, I think that's when it tops out. So I don't know who's that person, but I know for sure that price will tell us or show that clearly. What I'll be looking as is breakout failures, because generally these kind of tops do happen with the help of breakout failures. It's a trap. Now, yeah, I have a breakout. This is a range bound behavior of the bank Nifty, and any kind of slip below 43,200 in the coming week is a clear breakout failure. Will that happen? I don't know, because the bank Nifty has enormous support from State Bank of India. ICICI Bank is at a make or break level. HDFC Bank is on the verge of giving a breakout on the upside, or it can slip. So that particular pack is very difficult to judge. One of these names that I took right now, I'll be talking about them in a little bit of detail later in this particular video. Now, I would like to bring in your attention to the comparative chart. Now, this might at the very beginning look like, oh, what is this? Now, this is nothing but a comparative chart which I'm taking a look at, let's say, from a period of let's do YTD. Yes. Now the black one is Nifty, and these are the various sectors. When I click on them, the names will get highlighted here. Now what I want you to notice is where the Nifty, the black line, bottomed out. I can put a vertical line here. There you go. And let me give it some presence. That's nice. Didn't I select black? Okay, it's 59%. Yes. Now I think it will have presence. Now this is where the Nifty bottomed out, and from here we've got this rally. And if you notice that at this juncture, which were the sectors which were underperforming the Nifty? Means at that point when Nifty made a low, most of the sectors were underperforming the Nifty. And amongst this 1, 2, 3, 4, 5 names, only 2, if I take the name of the color, the yellow one and the orange one are currently above the black line. So these two sectors which were at the bottom of the Nifty underperforming the Nifty has now gone into the list of outperforming sector. And you would like to know the names, of course. So the yellow one is CNX Finance, thanks to HDFC. And the orange one over here, this one is your CNX Metal. So Metal gave us a beautiful move. So Metal and CNX Finance. With this logic, with this observation, if I come into stock charts and take a look at the RRG graphs, the good thing is CNX Metal is in the leading quadrant. So which means that I should maintain a bullish bias on CNX Metal and the metal stocks. Now I can take a look at the CNX Metal chart. It might look overbought. I might wait for a short-term correction. Tata Steel, Hindalco, other stocks, I may look to buy on a dip. So metals do not look to short. If you feel that the overall market is stretched and everything should come down, let the metals also come down and look for good buying opportunities close to support from the metals. One, finance happens to be in the weakening quadrant, from the leading to the weakening. Now when we get these kind of a behavior on RRG graphs, ideally they should move in a clockwise manner like this, but it can do something like this and this also. It can keep on oscillating from leading to weakening and then go up like this. So anything can happen. All these calculations are derivative of price. These are just to give us a sense, not exact predictions. So these two sectors, let's keep in mind that we would look to participate more on the downside and not look to short metals and finance. Amongst the ones which were weak and stayed weak, of course you can guess who's this. This is CNX IT. This one is the pharma. This one is real estate. Now real estate, pharma and IT, okay, are still underperforming the Nifty by quite a bit of a margin. IT had a big cut. The one which really picked up momentum it was already outperforming, and now recent movement, if you notice, I'm bringing my attention to this particular pink line, which is right at the top of 22.74% YTD, is FMCG. The light blue one over here is Bank Nifty. Orange one is metals. The green one is energy. It's just cooled off a little bit thanks to the fall in Reliance. And this one is consumption, and this one we just discussed is finance. So FMCG consumption, I think, continues to stay bullish. Bank Nifty little stretched. Of course, we saw that 10 consecutive months. But from this comparative chart analysis, I think an important thing is we should keep in mind that metals and finance. Now we come to trading view and take a look at CNX Metal. If you take a look at the leftmost chart of CNX Metal, right at its all-time highs, so it's just cooled off a little bit with the overall markets last week, big deal. Structure in the daily chart is beautiful, structure in the weekly charts is also beautiful, and as I was saying, this guy has also created an outside bar. Let it cool off. If it comes down somewhere here, I think we can look for a bounce back to trade. So not going short, but looking for buying opportunity. Should we do the same for the finance? Now CNX Finance, this one had a pretty good run, and it's kind of gone range bound, if you notice here, and pretty move over here. 1 2 3 4 5 6 7 8 consecutive weeks of gains. Beautiful structured behavior on the weekly as well as the daily time frame. Momentum is slowing down. So typical classic case that this index and the stocks should cool off, find some supports and look to buy. So idea is we should look around finance names and metals names and keep a bullish bias on them. That's the takeaway. Now quickly, before I go to few discussion on few stocks, a quick look at the RRG graphs, and if I reduce this to 1 week and sort it out, then of course PSU Bank and FMCG, the leaders, down IT, real estate, healthcare, energy. But important thing is, I think I should sort it in terms of the tails over the last 12 weeks, amongst close to 3 months. And you see the same name, PSU, metals, Bank Nifty. Now, PSU Bank, I am taken CNX 500 as the underline. It's right up there. I am extremely uncomfortable to even consider any kind of long positions. Even if it goes up from there on, I think it doesn't make sense to chase these names at this juncture. I'm going a little underweight, booking some profits off the table makes sense. Metals we just discussed. IT is in the improving quadrant, and we know how IT has improved. I think TCS went through, 9 weeks of consecutive gains before it fell so hard last week. So IT is not bad. It's probably will take a little bit of time because of the extent of last Friday's fall. Pharma is difficult. So let's take a look at Pharma pack. You'll notice that it has now shifted into a downtrend on the intermediate time frame. Short term is down, and this is the weekly charts, which is, I would say, make or break. So difficult. Sun Pharma gave a sharp move down. Lupin also came off a little bit. Dr. Reddy was trying to bounce back. So Glenmark was holding pretty strong. So not a very clean trending pack from the pharma. So pharma can be a little difficult to trade. IT, I think we should wait for a little bit of selling ease off and then look to go long. Oil and gas, and I'll now straight away go to talking about few stocks. I would like to bring our attention to Reliance Industries. Okay, now Reliance gave us a beautiful breakout, this one, which looks very clean on our weekly charts. This is the breakout. Last week it has come off a little bit. Heiken has slowed down a little bit. Structure is fine, just into a structural, fresh, nascent uptrend. Should not fall significantly from here on. Means an important level for Reliance, I feel, is 2550, 2600. 2550 and little above, let's say 2550, 60 kind of levels on the downside. It should not slip below this. That will be disheartening, which means that this range bound behavior is still on. On the other hand, if it holds and sooner or later in the weeks ahead, maybe in Jan, once it takes out these highs, Reliance can lead the move, and it generally does. It is known to do that. So interesting structure in the weekly. Daily is definitely weakening. Short-term trend has anyways moved down. Beautiful momentum on the downside. It should somewhere here should make a soft landing and bounce. Should, ideally, for the health of the market. If it doesn't, if it fails, then the downside levels of the Nifty will open up. HDFC Twins, keep a very close look at these two stocks, because as you can see, it's completely range bound. It's completely range bound. Loss of momentum completely. Weekly charts, 1, 2, 3, 4 weeks of consolidation. Make or break. If these guys move, it will support the index. If it breaks, it will drag the index with itself. Especially HDFC Bank also, you will notice similar kind of a 1, 2, 3, 4. Now I always say this, that when you see a consolidation after a rally, momentum definitely will cool off. If volumes comes down, ideally it should give us a breakout in the direction of the previous trend. So I am more bullish on HDFC Bank and HDFC, and expect that both of them will support the market. But then 10 weeks of positive moves from Bank Nifty, and if HDFC Bank breaks out of 4-week range, it will gain easily 5-6% ahead. Then are we looking for more gains from Bank Nifty? So that's a little bit of conflict that I'm facing, especially if I add my view on ICICI Bank, because ICICI Bank over here, right here, I think is make or break for this stock. I think iBank, and if Bank Nifty comes down, it can be iBank, and if Bank Nifty goes up further, then it will be HDFC Bank. That's where I actually stand. So iBank at short-term supports, momentum has been slowing down. In fact, the momentum is slowing down on the higher time frame, and this is why I'm a little tad bearish on ICICI Bank if I see any kind of a break below this slant on the upside. So with this, I think we are headed for another difficult week of trade going forward. Stock specific movements which may not last for multiple days, maybe for just few hours. So strategically, one should be extra careful, cautious. One should be extra agile and not expect too much returns. I don't think the couple of weeks ahead are going to be the weeks where it's going to be easy picking. It's not going to be easy picking. It's going to be difficult. So whatever little we can pick up, so be it. If we can't, so be it. Wait for that time when easy pickings come by again, right? Till then, I hope you enjoyed your weekend. So did I. And I just hope that we have a good week ahead of us starting tomorrow morning. Take care of yourselves, trade well and trade wise.